Breedon Group is the UK's leading independent construction materials group. Today they've announced their full year results for 2017, and it's been what the group describes as a solid year, with each of the divisions delivering an improved performance. I'm joined here at the London Stock Exchange by Pat Ward, the group's chief executive, to talk about these results in some more detail. Pat, good morning to you.
Good morning.
Good progress in 2017, but what would you pick out as being the main highlights of these results?
Yeah, a solid financial performance in the year. We delivered an EBIT of 80 million, which was up 34% year on year, and we reduced net debt to under 110 million, which is a good financial performance. But for me, the measure is much more than the financial performance. There was the fact that we were able to deliver the complete integration of Hope, which had been our largest acquisition in the group. We continued to invest organically in the business for 2017 and for future years. And I believe that we've continued to build a strong team and a strong workforce for the future.
You've been investing quite a bit in the business for future growth. Where have you focused that organic investment?
Breedon have a history of wise and organic investment in the business. Generally in the original days or when you make bolt-on acquisitions, it's for operational improvement to improve the type of equipment in the business. And beyond that, as you grow your aggregate base, the organic investment is for downstream plants and equipment to further grow your market. And we've continued that through 2017, even to the extent of the back end of 2017. We focused some of the investment in the geographical areas we expect to be strong market areas for us in the upcoming year.
You've also been active on the acquisition front again. What's been the thinking behind the businesses that you've acquired in the last year?
Yeah, we had two relatively small acquisitions in 2017, which came off the back of a massive year for us in 2016. And those two businesses, whilst very different, accomplished somewhat the same thing. The Humberside aggregate business was a small aggregate business which brought mineral reserves, and it was complementary to some of our larger quarries in the area. And then we bought a small business called Pro Mini Mix, a small ready mix business, which was added on to our First Mix branded mini mix business, which itself provides excellent customer service to that segment of the market, gives us broader geographical footprint, it allows us to touch more parts of the market, and it brings a lot of value to our business. It also brings some complementary value in that we're able to internalise aggregate and cement sales through that business.
I mean, that brings me on to another point, which is given the change, if you like, in the scale of the business and the size of the employee base, how do you as a management team ensure that everybody continues pulling in the same direction?
As a management team, we try and be as visible as we can in the business. We put a lot of emphasis on communication, but communication is a challenging area, and it's an area that I think we need to continue to work on. Much like health and safety of our workforce, communication is an area that will always be a key focus for us in the business. When I joined Breedon 2 years ago, I was particularly pleased with the Save As You Earn scheme that was in place within the group. And we have a high participation level within our employees. In fact, when we bought Hope, one of the first questions we were asked pre-acquisition close was, would the Hope employees be able to participate in the ShareSave scheme when they joined? And of course they were. And that becomes more challenging as the company gets larger, you know, the way that you can reward individuals. And for us, we're absolutely committed to an investment in the ShareSave scheme, and that being the case, we would anticipate that in the up and coming months our employees will hear more about the opportunity to participate in the next generation of ShareSave schemes. That brings a pride in employees when you have employees in the business who are interested in the share price and interested in delivering value to our customers, because ultimately it will help their share price and its personal reward.
So 2018, some commentators in the market are suggesting it will be more challenging than 2017. What's your view on the market? 2017
was a challenging year, but there were regional hotspots where activity levels were high, and we were able to deliver our results by participating in those market areas. 2018 will be similar for me. One of the growth areas, two of the growth areas are infrastructure and home building, and we happen to be particularly strong in those segments of the market. Further to that, certain geographical areas, East Midlands, West Midlands, North of England, can be strong activity levels, and again, we will participate in those areas of the market where we are regionally strong. Aligned to that, we've focused some of our investment in the last quarter of 2017 to grow our asset base within those areas that will be particularly strong. That will deliver that will deliver in the long term for our business, but it will also deliver short-term gains in 2018. So regardless whether the economy is our friend in 2018, we believe we will deliver through a focus on the expanded footprint we have, operational improvements that traditionally have been a success lever for Breedon, but also with a focus on haulage and distribution optimisation and commercial optimisation to enhance margins.
Well, it certainly sounds as if Breedon's going into 2018 on the front foot. Pat Ward, Chief Executive of Breedon, thank you very much for your time today.
Thank you.